Yeah, so I mean, at the moment, not really doing anything surprising. I mean, I'm gonna cover like the lower time frame as well as the higher time frame. I just recently, well, posted this pattern about 20 minutes ago, which I spotted just hovering around with my crosshairs, and basically since obviously hitting 65k, the lows around this region, literally we've been seeing a move upwards from this region, right, for the past 5 weeks, right, and we can see it's happened again. But if we start looking at obviously the retraces, right, we could class this as a retrace here. This is retracing 50% of the move. We can class this as a retrace. But in terms of where we are toppling out at around the week, right, after this, we could see around here. So we have Wednesday. We have Wednesday. We have Wednesday. We have, well, Wednesdays this time around marked low instead. So did see here, and then, well, you can see, well, from these previous examples, Wednesday, Wednesday, Wednesday. This one didn't really have much of a retrace. We just pushed down in into Wednesday, held it, well, held the previous wick high, and then it legged up, right? So that gives us about out of five, well, no, out of four, three of the times we have topped Wednesday, um, which is about, well, 75% chance, meaning that if we get to Wednesday, which is around here, um, that's where we could probably expect Bitcoin to have a retracement based on, well, just these three patterns, right? If that makes sense. All patterns can eventually decorrelate and break, but they're running the same script nearly every single week now, and I guess it's only been happening since we've started pushing towards the upside. So we already knew that we had a CME gap set around 77.3. So it's by no surprise that this was eventually going to get filled. It was a matter of when. But it seems like they're going to fill it either this week, relatively soon into the week. Because if we start looking at the weekly candle as well, we can see here. Well, let's go over to this chart, for instance, plain chart. Let's go on the daily actually. So daily. So we can see basically they're running the same script. It seems very forced to me. This type of movement isn't particularly organic, right? When I look at price action, I look for strong, significant lows being formed higher, like higher lows, but actually testing key areas, if that makes sense. And this here just seems like a very gradual move upwards, and we can see like the highs seem like very like carefully orchestrated, like a very slow grind, casual move up. We see same thing here, right? We pushed all the way up, we pushed down. Let me put that back on. So we can see we push down, straight squeeze through, swap all the way up, another squeeze, push right down again, and we can see near enough shaved bottom, very close to a shaved bottom on the daily, and just another squeeze back upwards, right? And when I look at this price action, it might be just me, but I don't look at this PA and think, oh, you know what, this looks bullish. What I see here is a gradual move upwards and the desperation for wanting to push the price higher and trying to take people out of their positions. So we can see retrace, V shape, retrace, V shape. And given the context of the overall trend as well, um, like well, we're in a downtrend, right? A lot of people are paying attention to. Let's go on this chart, for instance, here. A lot of people are paying attention to obviously this break here. Looking at this, seeing a trend shift or a structural shift, right? And what people need to understand as well is that sometimes these trend lines are just used to bait liquidity as well. So, in terms of like the overall market at the moment, this just seems like very carefully like orchestrated to push us upwards. So I'll try to find some more examples of maybe where we've seen something similar on the daily actually, where we just have a quick retrace and then V shape, quick retrace, and then V shape again. But so we saw here very similar. We just saw push up, we had a retrace, we had gradual swap, push down, all the way push up. Very similar. This is what I compared last time actually in one of my posts. Let's get this price action up here real quick on the screen. So if we start looking like very carefully, at the comparisons, for instance, just very, I guess, similar comparisons. Obviously, we're not going to see a 100% exact same movement, if that makes sense. But we can see how first push, testing somewhere key around this area. On the lower time frame, we have an FVG here as well. This wick here and this bottom wick here. We push through, we push through. We have this slow, grindish, twoppy movement. We have a push down, well, push up to here, and then we had to push down. And I mean, right now, nothing is really, I guess, structure wise. I'm not seeing anything strong, right? I'm just seeing, like I said, desperation to push us higher. Um, Many people are going to look at this and think, oh, this looks very bullish. To me, it doesn't. Having a strong V-shaped move in a downtrend, um, I guess the way I look at it is I try to look at the incentive behind every movement. I try to read the story of what's happening in a particular candle, right? And in this case, I analyze the weekly, the monthlies, and I try to understand the objective, the reasoning behind these moves. And I think everybody should have that view on the market, because then you start to think like a market maker, think like how they're going to trap liquidity, what liquidity has been swept, right? So we can see here, yep, we had a push down, push up, push down, range lows again, and now we're seeing this gradual move upwards, right? We saw a very similar retrace to this previous wick here, around here. Weekly opened, just pushed straight up. Like I said, looks like it's going to fill the CME. But yeah, I mean, at the moment, I think that going into May, it might actually be sell in May and go away. For those who are familiar with the phrase, May being one of the months which is underperforming, and I think that's going to be, I think that's going to be the case this time around as well, given that the incentive behind April was to push upwards. And I did make a post in my channel as well on X. We filled liquidity on this wick, swept the highs, right? So we've already swept out what liquidity? Well, everyone is, you can tell, people are saying everyone's bearish, right? Everyone is bearish, everyone's bearish. Well, order flow shows otherwise, right? You can say what you think or what this skeptical belief, but if the technicals are showing that people are not in fact bearish, then and people are positioning behind the scenes, for instance, in longs, then not very accurate measurement. But like I said, this reminds me of when we were, let me go to a chart, around similar around here, right? We swept the highs. We can have this extended move down. Do I think we're going to be around here? No, I do not think we're going to have this next major leg down. I do think, though, on the other hand, that there is a possibility we do sweep the wick low at some point. But again, you have to pay very close attention to the wicks and what they are hunting, what they are sweeping, the incentive. In this case, we had this monthly candle, and oh, give me a sec, guys. Give me a second. All right, like I was saying, you got to pay attention to obviously what liquidity is being swept on the monthly time frame, and this is very, very key. Is candle range theory in a way. You're basically observing what wick highs and wick lows are being swept, and this is very key in my trading. Right, first thing I do at the start of the month or the start of the new month is I start observing what liquidity has been swept, and this can help you position for the rest of the month. For instance, in this case, right, we pushed all the way down, pushed all the way up, closed around here, around this price region. What did we do? We swept the highs, right? Since then, we had a small sweep above, accepted back into the range, confirmation, pushed downwards. In this case, what did we see again? We saw another sweep of the wick low, and then obviously pushed upwards. So you can tell a lot just by observing the wicks, the closures, the body openings, and so forth, right? In this case, down here as well, we didn't have a sweep of the lows, but what did we see? We saw a sweep of the highs. Swept the highs on monthly, pushed right back down because we were bearish, right? What happened next? Next candle opened. Because we had such a bearish closure, most people are going to be bearish. Most people are going to be thinking, oh, that's a very bad close. We're going to break the lows now, right? So the incentive is we have to take out the shorts or the late shorts first before pushing lower. So what did we see? We saw push upwards. Then we saw push downwards and closed relatively bearish, but we already took out shorts. Considering we took out shorts, we didn't have to go relatively high throughout the rest of the month. So just pay very close attention to the body openings, closes, what liquidity has been swept, because in this case, we can see there's always a reaction after the sweep, right? And if we look around here, we've had the sweep, still have about 1.5 weeks, 2 weeks till obviously monthly close. So there is a lot which can happen. But my point is that you pay attention to these sweeps because you can tell a lot about them, right? You read the story behind what's happening through the candle, right? And it tells a lot. Wife calling, where's dinner? Nice, it's my girlfriend of 7 years. So yeah. But anyways, at the moment, seems like we're going for an aggressive push to the CME, very forced yet again. Again, let's just pay attention objectively to the structure, right? Does this look particularly? This looks like pure manipulation, right? And when I mean manipulation, I mean it's like a move which isn't justified, right? Obviously, we know the gap's going to get filled, but a more justified movement would be gradually moving up to the gap, right? Not instantly V-shaping towards the gap, if that makes sense. Because if we start looking at structure alone, let's go on the 4 hour, for instance, right? Take a look at this, right? So this is our previous wick high, right? What do we see? There's our wick high. Here, let's see what happened, right? So we can see we pushed all the way down. What did we do? We pushed all the way up. We've rejected here and here the previous weekly and monthly wick high, which happened in March, right? We rejected that bearish structure, acceptance back into the range, right? We pushed all the way down, tested the same lows, and now we're pushing upwards, right? So despite structure being bearish, right? Despite it being bearish, we still V-shaped, right? Very manipulative PA. And in this case, same thing happened here. Just take a look. Look at the exact same move. We're near enough the exact same movement, right? Very similar, right? We have equal lows. We just simply push all the way down to here, held the exact same lows and pushed upwards. And in my experience, if we are in a bearish trend, you do not leave these sweeps behind, right? Even in a bullish trend, you do not leave these sweeps behind. You just don't, right? Why? Because if we are genuinely bullish, they hunt as much liquidity as possible before expansion. Why? Because they want to build their own bags. Remember, if you have, let's say, 100 people with 100 million worth of longs, right? You take them out and you can add an extra 100 mil to your position, right? And this is how a market maker operates, right? So someone else getting liquidated on a long, Binance is opening the same long. Let's say you longed at 65k, you get liquidated. Binance is opening probably the same long. All of these market makers opening the same long around that region, trying to increase their position sizing, right? So that's why sweeps, even in bullish trends, are like they're important, right? This is why they happen. And in this case, we don't see any sweep, right? We don't see any deviation. We don't see any significant sweeps to the lows. All we see is just a clean retest, boom, clean retest, boom, and if we start looking, let's say, at previous bullish structure before, what happened every single time we had expansion, right? Well, we had a sweep, right? Before new highs, right? We have the sweep, we liquidate people before genuine expansion, right? Genuine expansion. Same thing, right? We had these lows around this price region, pushed here, rejected here, pushed down, tested the previous high, well, the previous all-time high at the time, reclaimed the range. Here, after having a significant sweep below the lows, it led to expansion to a new high. Same thing again, we had the deviation, the higher low, into expansion again. So what you're seeing here is before any significant trend shifts, right? Before any significant trend shift, you're seeing significant sweeps, right? So my question is, if we are genuinely bullish here, why are we front running every single sweep below us if we do not inherit the same characteristics when we are in an uptrend, right? Like I said, you pay attention to these significant sweeps because they're important. Same thing here. I remember this because I actually got into longs around this region as well. This was before I had my ex, but I was in another Discord. We saw push upwards. We saw push right below the lows yet again. Here, rejected, pushed straight through into expansion. Had a pennant form in, broke the pennant, expansion, new highs. But what did we see before we had expansion? We saw the sweep. We don't see any sweeps happening this time around on this leg upwards, if you'd say. All we are seeing is a gradual move. And like I said, if we are in a bear trend, essentially, what are they doing? They're building liquidity at the lows because when they are finished with this expansion or this leg upwards, we're going to just push back downwards. And that's just my thesis. Why? Because we're still in a bear market. Do I think we bottomed on 120 days? No, I've said this before. So it's far-fetched to call for something which hasn't happened before, right? You can't simply guesstimate, right? All of my predictions and everything which has allowed me to analyze the price action for the past 1.5 years. Not to brag, but I haven't really been wrong on the higher time frame at all, right? And many people for many years will know that, right? And the reason why I've been correct isn't because of skeptical thoughts, right? It's based on data, right? I'm trading based on historical price action, which we can relate to. I'm not just having this skeptical belief. Oh, the bottom's in. Oh, I think this. I think that. I don't. I don't. This isn't what's allowed me to be consistent on the higher time frame, right? So the skeptical belief here is that the bottom is in, which many people are calling, right? Is there any data to prove it? No, there's none. There's no data to prove it. So you're essentially calling for something which hasn't happened before, and that's something I never do. And if I did do that, guess what? I would have never called the top. If I had the skeptical belief of where this cycle's different, we're going to decorrelate from the 4-year cycle, I would have ended up trapped like the rest of people. Why? Because they believed we were going to decorrelate from something which has been happening for a very long time. And like I've said, although I do believe we are going to decorrelate from the 4-year cycles, I do not think it's going to be as drastic as a shift as this, right? We're not going to go from a 350-day bear market to just 120 this quickly, right? That's just my thoughts. That's just way too soon to happen. I think it's going to be more gradual. I think it's going to be 350, 300, 250, 200. Gradual, right? I do not think it's going to be 350, then 120, right? Because if we're following that pattern and that metric, right, that would mean that the next cycle we're only going to drop like for 3 days, and that's our bear market, right? So it doesn't make sense from that sense as well. So also, let's have a look at the mega higher time frame now on the 6 months, see if we can see anything. I don't want to delete these scribbles, but yeah, so if we look at the scribbles, well, not scribbles, but the chart as well here, the most we've had in terms of 6 months red candles, we've had 3 6-month red, 2, 2, and now we are 2 again, and the 6-month close is over there at 87k. So probably good chance we're going to remain below that right this year, based off obviously what's happened in the past. We could see on minimum we have 2 red candles in a bear market. This one was 3, but we could see majority 2, right? So probably going to maintain below 87k. So anybody who's calling for 90k, I don't know what they're anticipating, but basically anticipating us to break away from history yet again. When you go on the logarithmic BTC, the trend line wasn't broken. Can you maybe explain when logarithmic makes sense? Usually you want to look on not the logarithmic with trend lines. I mean, let's go on the weekly actually. So for instance, if we go on the logarithmic here, we had this here, saw a push, almost perfect retest, then a rebound. We also saw another trend line. I don't really draw trend lines on this time frame. We saw one here because this is just 2 points of contact, right? In this case, If I drew one here, it would only be 1-2 points, and then if had a failed breakout. So for instance, here what we saw is we saw this move here, failed break and a push down, but this isn't similar to where we are now, because this time around, well, we can see here we were forming lower highs, right? Here we just formed a higher high in a breakout. Doesn't necessarily mean we're bullish, but let's go on this chart now. If I drew from here, for instance, we can see there's a trend line here where we had a failed breakout into the capitulation FTX collapse, right? So I would recommend personally to draw them on not the logarithmic, because this chart can be can show you different data, and most people are not looking on the logarithmic chart, they're looking on the normal chart, right? So I wouldn't draw them on this chart, for instance, because it gives you an inaccurate measurement of what's happening price action wise at that present time. Yeah, this was another chart which I was going to post, but I didn't post because it looked similar to my last one. But again, sweep, 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 and again, sweep. Do we see a bottom form after the sweep? We see a push down here. High, low, and we push upwards. So, I mean, this was our real confirmation here that we were in a bull market, right? So, theoretically, let's say bottom is in and we push straight through. If we do this, yep, then the bottom is in, because we see consolidation above here, right? Meaning that we've flipped our high with force, right? And if we flipped our high with force, we look for the retest on the weekly and the monthlies, and then we look for that expansion. However, what you cannot call for, in my opinion, is a genuine structure shift based off this. There's not enough information on the chart to show that the structure has significantly shifted, right? There's nothing. There's what? We just see a sweep above, and that's it. We haven't seen any genuine acceptance. We haven't seen any strong consolidation, right? All we have seen at this present time is that we've swept the highs, right? Do we see weeks of consolidation above 76, 77K? Do we see like strong signs of reaccumulation? No, we do not. All we are doing here is testing the highs. But naturally, obviously, you don't expect the market to change or humans to change, because if that happened, everybody would win. And that's not how the system works. People have to lose. And unfortunately, there are some people who are just not able to comprehend the psychological warfare of how the market manipulates you into believing a certain thing. So, of course, people are going to flip bullish after the simplest of, well, after a sweep like this. Of course, people are going to be calling for a genuine breakout and genuine things like this, is because they are reacting to present price action. They aren't viewing things objectively. And like I've said, objectively viewing things would be seeing weeks and weeks of consolidation above these key areas. What we're seeing now is nothing like that. We're just seeing first retest, push up, we have a CME gap above. Again, need to maintain below this high ideally here. We could see another sweep to here. But again, we're not seeing any consolidation or acceptance. For us to see that, this would basically have to do this. We'd have to see this, push all the way up, fill the gap, and then this would probably be something like this, our new range, right? And when we see that new range, then guess what? Yeah, I'm going to get stopped on my swing short, right? But if I see genuine acceptance and trend shift, then what am I going to do? I'm going to look for longs into new all-time highs, right? We haven't done any of this. All we have done is literally this, right? That's all we have done. And if we take a look at here, 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 multiple times, every single top was formed from the same structure. Why? Because people are flipping at the wrong time and obviously too quick to adjust their bias. I made a post on X as well about the mistake I see so many people make, right? They get stopped out once or twice. Doesn't mean you're wrong, right? Because sometimes what happens is you get stopped out once or twice, then you flip. And in the process of flipping, that's precisely the time where what you think is going to happen ends up playing out. And then you end up taking a loss, even though you are favoring the direction it's going in, right? So, for instance, let's say you were short here, you get stopped. Short here, stopped. Oh, we see our first little sign of acceptance. You long. Price pushes down, and you end up just taking more losses just because you flipped bias at the wrong time, right? So just because you end up being slightly early, right, doesn't mean you're wrong. This is what happens to every single person. And people might think, oh, but this is just being stubborn, right? This is just you have to flip your bias, guys. You have to be diversify with the market conditions. You have to do this and that and whatever. And it's correct, right? If you are structurally invalid, then yes, you shift your bias. If you have not been structurally invalidated and you end up shifting just because of what's happening presently, well, then, my friend, you're going to get chopped to pieces and you're going to lose all your money because this is how the market works. So, one of the things which I've learned from experience is obviously being early doesn't mean you're wrong. It just means the entry was wrong, and people take like one or two losses, they end up shifting bias, and most of the time when they shift bias is exactly when the market turns against them. And this happens all the time to most people, right? People who are obviously who took shorts around here as well are now calling for like 80k, 81k, 84k. They're just naturally hiring their targets, right? Because they're calling for these targets, they're going to be looking for longs, and then in their longs, they're going to long the entire move downwards, even though the trend is bearish, even though they knew that. So you can see like most of my shorts as well. I made a post here as well. Like most of my shorts here, so I had deviation in nearly every single short here. Could I have closed this when it was below the entry a little bit in the event of obviously filling the gap? Yes, I could. However, I didn't want to take the chance because we saw a brick here at 84k and we never filled it. We just legged down. And I thought that if this happens to be one of these unique periods, which obviously it doesn't look like it now, but if it happens to be, we would have seen something like that. And we did see something similar here. I remember we had a gap here and a gap here, and they didn't get filled. So far, we've got one gap, meaning that we might be due another gap or a exhaustion gap. That's why I thought, you know what, fuck it, I'm gonna hold it, take the risk. And I did mention that if people wanted to, they could easily close their position and look for a higher entry. But yeah, I mean, this just looks retarded to me, right? You're just building leverage below us. So let's have a look. Let's have a look here. Actually, matter of fact, let's go over here. Okay, I don't want to do anything of that chart. Let's go on the hourly. Let's mark from the start of Monday. And then let's get SPX up. So, I mean, SPX isn't breaking a new high. We've seen a little bit of a move upwards, not much, not crazy. But if we look, SPX is red on the day. Meanwhile, Bitcoin is nearly up 4%. right? SPX is red on the day, and Bitcoin is obviously seeing this move here. So we're seeing an inverse correlation now. Yeah, 3.6% move. They use liquidity to enter slash add to their position. Yeah, exactly. And that's why bottoms are always messy. And that's why many people capitulate the position. What you do not see is a clean bottom form. Doesn't exist. They need to rebalance the books in their favor. If they take out people, it allows them to increase positions. And plus, they get okay, pretty much, right? When you liquidate someone, right, there's slippage, right? So if you are Binance, for instance, you have many users trading on your platform, right? If you liquidate them, there's slippage. The slippage, the fees, right? The maintenance margin. Who does this go to? The exchange, right? The exchange is the one making money in the end through the slippage and the maintenance margin, right? So if they take people's positions out, not only are they making money by doing that, but they are also rebalancing the books to add to their own positions. For instance, if they know the bottom is in, let's say you have billions, right? Well, you haven't really got to worry about liquidation, right? Let's say you have billions, right? You can just simply chop out 500 million long liquidations, add 500 mil to your long. And you chop, rinse, repeat the process. You make money through the slippage, the maintenance margin, everybody getting liquidated in the process. You make money by doing that, and you increase your own size. What you do not see is a bottom just form straight upwards with no liquidations happening, right? With no one being hunted. Because this, what objective does this? How do they benefit from this? The price goes up, but they haven't had much time to build their positions, right? Remember, if you're trying to scale multiple billions into the market, you can't do this over the course of a few weeks or months. It takes a while. That's why most bear markets are taking 300 days plus. As of now, well, the bottom, right? So for us to also say that we've bottomed in 120 days is to say, okay, so Binance, let's say Binance, Coinbase, Bitfinex, all of these massive exchanges and institutions happened to buy exactly within 120 days and deploy all of their capital, right? They just happened to do exactly that. I don't think so. I don't think so. Right? It takes a while to build your positions. That's why they orchestrate these ranges. That's why they chop people. That's why they liquidate people. And at the moment, it's clear what they're doing. They're not liquidating longs, whilst the trend remains bearish, right? So remain below these areas here, this high around here, you can still push lower. The reason I have an SSL on my short position, right, is because let's say we have another sweep of this wick here and end up going to here, right? Let's say we do something like this. There's a good chance we just do this, right? If I had a hard stop loss, it would take me out and then it would likely reverse. My closure is going to be dependent on how the weekly is closing, right, and how we are reacting to the price action, right? So I'm not running a hard stop loss on swings, right? I'm running an SSL. A lot of this used to be me. Yeah, I mean, it happens to everybody, man. It happens to literally everybody because this is the way the market works, right? Like I think most traders they teach you at the start that look, if you're wrong and you're on the wrong side of the trend, make sure you don't stay married to your bias, right? Because people lose money when they're married to their bias, right? However, the mistake people make is if you're married to your bias, even though the trend has shifted. Let's draw a scenario, right? So let's say we have resistance, we had a sweep. Let's say we do this, right? Don't stay married to your bias, right? So you were short, yeah? You were short, you were looking for shorts, you're looking for shorts, you're looking for shorts, oh, you get stopped, right? But what do we see here? We see structural confirmation, the trend shifted. We see a break here, we see a push to new high, we see a higher high being formed. So what can we expect? A higher low, right? Most people who stay married to their bias when the structure shifted are the ones who are making the mistakes. There's nothing wrong staying married to your bias unless there's structural confirmation, right? So for instance, let's say this pushed here and we started pushing downwards again, right? There's nothing wrong sticking with your bias as long as the structure shows it. If you stick to your bias once the trend is shifted, then this is just going to end up in losses. Right now, we're just above the highs, right? We're somewhere around here, right? Have we seen this? No. So have I been structurally invalidated? No. So am I going to shift my bias based on present price action? No, I'm not. So yeah, I mean, a lot of people make this mistake, and people are still doing it on a frequent basis. But if you let's say you're short biased and you stay married to that bias, even though the structure's doing this, right, and pushing higher, yeah, on the higher time frame, right? I'm talking specifically on the higher time frame because lower time frame things can shift, right? We're talking on the higher time frame here, right? If we can see structure shifting drastically and you're still short biased, let's say we're going up and you're still short biased, well then this is just wrong. Then that's where you have to diversify and be like, okay, look, I'm wrong. I'm going to trade the trend and not my bias. But if we don't see any of this, there's no reason to shift your bias. And as of now, like I said, we're still in a range, right? These are our highs. We haven't seen consolidation above or anything, right? If we apply something similar to, let's say, the lower time frame here, we can see a push up, okay, higher, low, very aggressive squeezes, like I've said. So what can we see here? Well, we can see, okay, higher, low, higher, high, but again, still a sweep of that high there. You can't really say this is a high, low. Well, I mean, you can from here, but it was equal as around here. So we see this, right? So let's say, for instance, we fill the gap, which is around there, and then let's say we start doing this, well, then your structure shifted on the lower time frame, right? Do we see any of this happening yet? No, we don't. Do we see this happening on the higher time frame? Well, we can see we've swept the highs. Have we seen any acceptance? No, we haven't. But my point is that it's very simple to implement. Like, don't overcomplicate things when you're trading. Like, sometimes the simple things work if you just pay close attention, right? So in this case here, we saw the wick above the sweep. We saw here. But what did we see? First and foremost, we broke structure, deviation, we pushed down to here. So there's a very good chance that once we push back up again, we were going to form a higher low, lower high, I mean, right before a lower low. In this case, we saw that, right? So we saw here, push down, we've reclaimed, we pushed up, we've reclaimed, pushed up. In this case, we gradually swapped upwards, pushed here, another higher low, pushed here, another higher low. Again, very violent higher low based off the current candle, right? But we saw a higher low. So just involving sometimes the basics is quite key as well. And I mean, even from you can use like wave counts to your like you can use wave counts as well. I use them rarely, but they do work um, if you involve other different technical factors as well, right? But for instance, here, if we form a lower high below the gap, we start pushing down, start the week, there's a very good chance this liquidity is going to be swept. And that means that, okay, lower high, we've significantly shifted structure. So we might push down, do this, get the higher low, and then obviously push back down again. On the other hand, if we do not remain below the gap, then we have another sweep of the high, possibly could extend up to here. And again, that would mean you observe the reaction. If we see another sweep, if we see a lower high, this is your real confirmation, right? This is if you want to be extra safe and preserve your capital as much as possible. Like if you want to trade very safely, and I mean very safely, you're not short right now. You're not waiting to try and get the top. You're simply waiting for the structure to confirm it. So you could do this if you want to be extremely safe. Me, most of my best trades are not from playing safe, right? It's from being bold. Um, and it's worked quite well for me. But if you're new into the game and do not have much capital, then my advice would be wait for the structural shifts to confirm that the trend is shifting and then trigger. That's the smartest way to do it. So we could push up again all the way to the high, right? So there's no point shorting around here, right? You just observe the price action, wait for the lower highs in the structure to shift on. I'd say the best time frames for me at least would be the 4 hour. 1 hour is quite good on the lower time frame, but it can be quite manipulated as well. So 4 hours very good time frame. I would use that for good structure shifts as well. But that's the proper way of trading, right? If you really want to preserve, right? But at the moment, I've been on quite a good run, compounded quite a good amount, and I'm willing to take the risk on being wrong if I end up being wrong. Take a look at USDT dominance. Let's see what's happening here. So we saw a sweep of the wick low here. Let's go to the hourly. So we do have a little bit of a deviation. Trend lines are messy. Obviously, everybody's familiar with, okay, you have this like this, and then everyone's familiar with that, right? That's where we are now. But sometimes what they do is they just extend it like this and then do some shit like this. Um, that would be equivalent to this gap here, sweeping this wick low here as well. But given that we had a nice push up today, we might end up going to here, testing maybe some lower time frame areas like around here. So for instance, on this case here on USDT dominance, you observe the structure, right? So what do we see? You saw a sweep here, acceptance back into the range, another sweep, previous OB lost, lower high here, pushed it down, liquidity swept. So what do we see here? The trend is bearish on USDT dominance, but what are we seeing? We're testing here. So there's a good chance that if Bitcoin remains below or holds around here on USDT, then this pushes up to here. And then if we take that 3 o'clock, apply that to where Bitcoin is now, that puts Bitcoin testing somewhere around these areas here before filling that gap if we end up doing that, right? So just combining as many things as possible together. You can always use these. I guess to an extent, I do use waves and wave counts in Elliott wave, but I do not visually show it on the chart. It's one of them things where I don't think it's an extremely complicated way of trading. So because of, I guess, without sounding like having a massive fucking ego, it's just easy for me. I don't have to even draw them. I could just see it in front of me. So from obviously all the hours I've put in, I can just visualize what's on the chart without even having to draw it. So I do use Elliott waves subconsciously in my head. Most people are drawing them out, but I just don't draw them out. If that makes sense. So you just apply as many of these things together, and with experience, obviously, everything will start to click together a little easier. But yeah, short term bearish on USDT dominance, but if we look at, let's say, the weekly here, you can see, well, we've been in a bullet trend, right? Haven't seen this pattern before though, where we've just basically wicked up, wicked down. It's very messy what's happening. Let's have a look. Oh, matter of fact, we see one here. Well, not very similar, but you get what I mean, like this, like very similar. I believe I also made a chart about USDT dominance as well. I'm going to quickly cover that in a little bit more detail here because I want to get my point across on that. This one. So basically on this chart, for those who maybe didn't understand it, obviously Bitcoin creates an all-time high. We break the previous dominance high here. Why? Well, because they're printing more money, right? They're printing more, right? Tether Treasury are injecting liquidity into the markets, right? So of course, there's going to be more circulating USDT each cycle, right? Every cycle there's going to be more USDT. Why? Because people are parking their assets into that from selling Bitcoin, and because there's more of a supply of USDT because of Bitcoin's market cap increasing, right? So in this case, we see a gradual increase every single cycle of where we break USDT dominance high. Why? Because there's more supply. In this case, we haven't broken it yet. So another little subtle confluence here as well, right? We've seen this every single time. Why would this time be any different? If that makes sense, right? So again, a lot of my trading is based on data, and in any field, the more data you have, the more accurate you're going to be, right? So what's allowed me to get to where I am is no bullshit, no skeptical beliefs, right? It's simply data. That's it, right? If the data's there, I follow it until it's gonna just stop decorrelating. Then I'll search for new data, and then I'll readjust, readapt, and so forth, right? But there's nothing to readapt to if the same thing's happening all the time. So yeah, based on this USDT, we could break the high again, right? Let's have a look at. Matter of fact, I haven't looked at M2 in months. Let's have a look at M2. Let's go on a plain chart. Fucking hell, this thing's still going up, man. What the fuck? Yeah. Let me go on an index chart. I wish I drew this on another chart. I keep running out of charts to draw on. I don't want to remake this fucking thing again, man. Let's go on 4-day. So another misconception people have is that M2 supply doesn't work, and that's because they got it wrong. Now, Bitcoin topped here, right? Bitcoin topped here. Bitcoin topped here. Bitcoin topped here, right? Okay, let's remove this crap. All right, that's enough to explain what I want to say. Now, look, just from history, right? Just from history, right? You probably remember the narrative when we were at fucking 120k. Everyone was, oh my god, M2 is going to the moon. We're going to 150k. Now, everyone has completely abandoned M2 because of how fucking wrong they were. However, they were wrong because they weren't viewing the data correctly, right? In this case here, we could see, okay, so we topped here, but what happened here? M2 still went up, even though the price went down. So we see one correlation where M2 still went up and Bitcoin dropped. Well, same shit's here, right? M2 went parabolic and we still topped and pushed lower, right? So what did we see? Exactly the same shit as here. What do we see in 2021? Well, we see M2 going up, more money printing. We still went lower, right? Now, after the bear cycles, right? After the bear cycles, M2 is very reliant. Why? Because more money printing equals higher prices, right? So when you're in a bull trend, it works very well. However, we were towards the end of the cycle, and because of that, M2 still went up despite Bitcoin going lower, right? And we could have seen this based on history. You can see M2's all the way up here, but what do we see? Just from Bitcoin's creation, right? We could go all the way down to here, but this was like when Bitcoin was at what, like $10 or something. But we can see here we saw a drop on M2, right? We can see we saw a drop on M2. We can see we saw a drop on M2. And every single time M2 has that drop, what happens to Bitcoin? Let's mark the top of M2 now. Top of M2 and top of M2. Now we start looking when M2 tops. Let's get out red here. It leads to further downside. So if M2 happens to top again, where's Bitcoin likely going to be? Well, it's likely going to be at the highest, right? So if M2 starts pushing down like this, we're talking over the next few months, Bitcoin is likely going to have the extension lower, just like it's seen every other cycle, based on the data, right? Data. No bias. This is just data, right? So another useful thing and how to use it properly and not like all these other people who are just looking at it at face value and not trying to look at certain correlations, right? But if we look here, we can see Bitcoin still goes up, even though M2 takes a while to topple out. Matter of fact, let's measure how long it takes M2 to topple out based off what we've seen in the past, right? Let's measure these moves, right? Got a date range here. So we have 200 days of a bear market. Let's get this as accurate. So 197 days before we have a top on M2. 121, 150. You can see we're on 189 days. And the most we've ever seen before extension lower is obviously 197 days. So that gives us about, if we are following history and following the M2 and how this correlates, it gives us about, at the most, based off obviously 197, 121, 149, it's given us about 1 month, 2 months before M2 tops. And when that happens, you see the extension down on Bitcoin, which would mean this is a lower high. So none of my trading is based off of impulse. None of it's based off of just, oh, I'm shorting just because it's in resistance, guys. No, right? A lot of it's grounded in a lot of other technical factors, which many people are not using. So it might look simple face value because that's how I present it, right? I can't present all of my confluences and everything together. Why? Because I don't want to release everything. And two, nobody would understand it, right? Because it'd be too much. It would be too overwhelming for me to show absolutely everything, right? Too overwhelming. And the reason I make things look simple is because I understand them quite well, because I do this every day, all day. So this is another little subtle confluence to use, right? We haven't seen a drop on M2. We can see another little thing on SPX. Let's get some volume, right? Volume. Oh, where is it? It's not the one I want. It's not showing me it. Doesn't matter. Yeah, it's not showing it. It's just showing. Yeah, it's not showing it. Okay, never mind. Let's get OBV. Yeah, it's not showing it. All right, never mind. Doesn't matter. But yeah, I mean, might post a chart of that M2 stuff later on. Um, but yeah, that's another good thing to use as a confluence, right? Happened to be shorting too early and got burned. I mean, it's part of the game, man. It's part of the game. Losses are lessons. BTC looking like it's about to liquidate a ton of shorts. Yeah, I mean, at the moment, OI has been extremely fucking dry on this move upwards. And what we are seeing is predominantly just shorts capitulating. Obviously, see a little move like this on this move upwards, which is natural. But what do we see genuinely in terms of the price? Right, we're seeing a decline. We're seeing all of this flush out. So leverage is closing out. Funding is returning close to baseline. So majority of this move, we can suggest that people, what are they doing in this range? They are simply capitulating their shorts. And we can suggest that longs are also taking profit because OI is literally not moving up. So people are actually just closing out positions. So not really much strength behind the move, if that makes sense. Like if we look like let's try to find some other examples. So look on this move here, for instance, we saw very strong perps and OI increasing. We had good sufficient spot bid, a strong rally, right? What did we see here? OI increasing, a strong rally from perps supporting price as well as spot. What do we see here? A rally, perps supporting price. What do we see here? Well, we're seeing a push upwards and perps are not supporting the price. So mainly not much strength as previous rallies. Yes, we can see some funding going negative, but even funding was negative here. And we still went from 88 to 74. Same thing when we were up this high as well. We had slightly negative funding as well. USD just made a higher high after making a lower low. Yeah, we'll have to observe carefully. But from my experience, the strong rallies we're usually seeing perps supporting price, in which we're not seeing perps supporting price, which is not necessarily bullish. On the higher time frame, we're speaking higher time frame. But yeah. All right. If anybody has any questions, let me know. Been streaming for about an hour now. I want to keep these streams about an hour because otherwise the record will be absolutely ages to upload. Opinions on Rave USDT? Yeah, that's insane. What happened? What happened with that? It's a bit. I don't know. The moment Zach commented on it, it just nuked. It's a bit strange because it was a bit sus. Yeah, I mean, wild. I don't know what to tell you about this coin. In when you see moves like this, you usually see something like this happen, flat line, and then like this. That's what you usually see with coins like this. After a retrace like that, you see liquidity dry out, liquidity just die. Everyone forgets about it. People just start closing positions out, and then it just gets forgotten about. But this type of shit needs to be illegal. It literally went from billions in market cap to nothing. Gold, could I even looking at? Yeah, I looked at gold. I looked at gold basically. In the last stream, we drew this. Like this is when the price was here, like literally testing into it, and we had a nice drop from 4,800 to 4,500. Let's remove this stuff now. So I mean, yeah, I mean, I did briefly cover about gold, um, and how like most of the tops they somewhat look like this, where we have the capitulation, Darth Maul wick, and then we just do like this bleedy type stuff. So if we like maintain bearish structure, and I mean properly maintain bearish structure, then there's a good chance we just end up like doing stuff like this and just ranging around.